Hey there! Today we're diving into a wild ride through time, where between 2006 and 2012, where the USA found itself in a housing roller coaster that reshaped economies worldwide. It was a whole shakeup that sent ripples far beyond American borders. Now we all know about the 2008 financial crisis, right? But here's the thing. Not many give a second thought to the lead up to that crash. The sneaky years we call the bubble era. That was the time when the value of American homes decided to take a wild joyride. Housing values, they were skyrocketing. It was like the American dream on steroids, a modern-day gold rush. But here's the kicker. Those prices, they were going up quicker than your morning cup of coffee. Imagine trying to buy a house, and every single day, the price tag's higher than the day before. Frustrating, confusing. You bet. And did the story end there? Nope. Post-crash, the market didn't just settle down. It kept on climbing. Picture this, a steady rise until boom! 2020 hits, and things take a sharp turn. Like hold on to your hats kind of turn. Now while the storm clouds brewed over the US commercial property market, there were whispers in the air. People were talking about bad loans, falling property prices, a whole storm warning. But guess who wasn't heavily tangled up in that whirlwind? Berkshire Hathaway. Yeah, these guys were like, nah, not our gig. Why? Well, turns out their tax structure made them steer clear of the commercial real estate mayhem. So go and grab your popcorn, cause this ain't just about houses and numbers. This is a tale of economic highs, lows, and some strategic sidestepping. Join us as we peel back the layers of the bubble era, a story that paints the rise and fall of housing values, a tale that shaped the economic playbook for years to come. If you're as keen on investment strategies as Warren Buffett, don't forget to hit that subscribe button below. Trust me, you won't want to miss what's coming up. So let's talk about the present. It's kind of like deja vu. Investors like Warren Buffett, they've been waving red flags for a while now. They saw this coming. A situation resembling a risky game of real estate, fueled by speculation, leverage, and let's be real, a whole lot of greed. See, the problem lies in the market's over-reliance on dicey fundraising tactics, and wait for it, flawed valuation methods. It's a recipe for disaster, a setup that amplifies risks, causing prices to yo-yo unpredictably and worst-case scenario, collapse like a house of cards. Ever seen a penny stock market? Well, investors' behavior in this real estate realm, it's kinda like that. One-off purchases keep the optimism going until BAM! It's like dominoes. The decline hits hard and it spreads faster than gossip at a family reunion. And let me paint you a picture with a place like Phoenix. Yeah, it's not just a city, it's an example. A textbook illustration of how property values can take a nosedive in the blink of an eye. I'm talking about sharp declines, wiping out significant chunks of investor wealth in just a short span of time. This isn't your everyday market, it's a delicate balance, teetering on the edge, where one wrong move can send the whole thing crashing down. So buckle up, because we're about to uncover the risks, the fluctuations, and the tales of investor woes that might just reshape the way you see the real estate game. Alright, let's take a step back and zoom out a bit. See, in the world of housing markets, it's like this ongoing cycle, a roller coaster of ups and downs. But here's the kicker. These fluctuations, they're not just a one-time thing, they are baked into the DNA of real estate and financial markets. History is a pretty good teacher, right? It's got this habit of hitting us with deja vu moments, showing us these recurring patterns. A tale as old as time, really. Speculative bubbles inflate and then BAM! We get hit with these sudden crashes. Now look around, the here and now. It's almost like history's playing a rerun. Those warnings from before, they're still relevant. It's like the market's waving a red flag, shouting about its vulnerability to stuff like speculative investments, leveraging, and oh, let's not forget about those wonky valuation practices. Here's the thing. That optimism we see in the market, sometimes it's like a fancy mask hiding the vulnerabilities underneath. And when those vulnerabilities rear their heads, it's not just a hiccup, it's a full-blown disruption. What makes it even trickier? The whole world is in on this game. Yeah, the interconnectedness of global markets. Talk about a web of connections. When a local housing crisis hits, it's like tossing a pebble into a pond, and those ripples, they stretch way beyond national borders. So bottom line, this isn't just about buying and selling houses. It's about understanding the bigger picture. It's about approaching investments with a cautious eye, armed with knowledge. Because in a game where everything's connected, a little bit of insight can go a long way. Alright, here's the real deal. When you're in the game of investments or even owning a home, recognizing the potential for ups and downs in the market is like having a superpower. It's crucial. No, scratch that. It's essential. So picture this. You've got this prolonged period of growth. Things are looking good, but in the back of your mind, you've got this radar for potential downturns. That's where the magic happens. Vigilance, my friends, that's the name of the game. Proactive risk management becomes your sidekick, helping you dodge potential losses when the market gets all turbulent. But hey, let's not panic. In the midst of all this market drama, maintaining your cool is key. A balanced perspective, a long-term approach. It's like having a sturdy ship in stormy seas. Diversification, making smart moves, and hey, keeping your finger on the pulse of market trends, they're your compasses, guiding you through the uncertainty. You see the real lesson here? It's not just about weathering the storm, it's about learning from history. Those past housing market crises, they're like these treasure troves of wisdom. They remind us of the importance of being smart with our money, planning strategically, and being sharp-eyed about how the market behaves. So as we sail through these uncharted waters, remember, it's not just about surviving, it's about thriving. And with a little financial wisdom, a dash of strategic planning, and a keen eye on the market's pulse, we're not just navigating through growth and downturns, we're mastering them. Alright, picture this. Warren Buffett, the oracle of Omaha himself, stepping onto the scene with some serious warnings about the real estate market. This guy is no stranger to the game, and when he speaks, you listen. So here's the deal. Buffett, he's not exactly throwing confetti about the state of things. He's waving these red flags about speculative behavior and folks getting a bit too comfy with leverage. Sounds like a recipe for disaster, right? His words? They're like a crystal ball. He saw this coming. The dangers of making high leverage with good old-fashioned greed. So basically he's saying, hey folks, watch your step. Just don't go overboard with this real estate rodeo. Buffett is also drawing parallels. You know how day traders in the stock market chase those quick wins, right? Well, he is seeing that same vibe in the real estate world. It's like investors are on this roller coaster, chasing short-term gains, looking for that quick flip. But here's where it gets real interesting. Buffett's not just pointing fingers, he's shining a spotlight on the aftermath. When real estate investors start acting like day traders, things get wobbly. Big fluctuations become the norm. And the big kicker in all this, when folks leverage themselves up to the hilt, Buffett's saying it's like lighting a fuse. There's a potential implosion just waiting to happen, a real estate market on the edge. In a nutshell, Buffett's sounding the alarm. He's saying, hey, let's pump the brakes on this speculative behavior, the crazy leverage and those short-term gains. Because in a market where everyone's looking for a quick buck, he's cautioning that stability. It's hanging by a thread. Remember Buffett's mantra, it's all about playing it smart, staying patient, and thinking long-term. So join us on this journey of financial enlightenment, where we decode Buffett's wisdom and share it with you. Hit that subscribe button and let's navigate the investment world together. Knowledge is power after all.